President-elect Donald Trump's election win has been extremely profitable for Elon Musk, whose net worth has grown by $276 billion since November 5th, meaning Musk's net worth now has inched closer to nearly $500 billion. Steve Ratner has some charts on this. Steve, what are you looking at?
So not only is Elon Musk maybe the second or even the first most powerful man in Washington, he's also the richest man in the world, as you just suggested. So let's take a look at why. It's principally because of two companies. Tesla, his electric vehicle company, which we're all familiar with, has more than doubled its market value literally since the election. You can see down here the stock price was kind of piddling along, and now it just shot up after the election. The company is now worth 25 times what General Motors is worth, even though it produces far fewer cars. Why did it shoot up like that? Because Musk is obviously counting on government policy to help him keep out Chinese imports, put in other EV regulations that will favor Tesla, and so buyers are buying it. His other company, which may not be as familiar to people, is SpaceX, because it is the most valuable private company in the world. SpaceX only does its valuation twice a year because it's not publicly traded. But what's happened since the election is it's raised some more money at a value that is 67% higher than what it raised it at just 6 months earlier. So 67% up in one 6-month period. Why is that? Because SpaceX obviously is heavily dependent on government contracts and government support for its launches. In fact, the new head of NASA, the proposed head of NASA, has been on a SpaceX rocket twice and is an investor in SpaceX. So kind of imagine they're going to get more or less what they want. And so that is now a $350 billion company, the most valuable private company in the world, as I said. So when you put it together, what do you have? Musk has Tesla shares. He's got SpaceX. He's got Tesla options, which are just another piece of this puzzle. And then he's got a bunch of stuff that looks pretty small here, but it's $7 billion, it's $13 billion, it's $25 billion in OpenAI, in X, as we know, in some futuristic things called the Boring Company and Neuralink, all of which have gone up enormously in value. And so, as you said in your lead-in, what's happened? His net worth has gone up 135% since the election, $276 billion. He's now worth $480 billion, the wealthiest man in the world, half of that roughly since the election alone.
Wow, stunning. And Steve, you mentioned this with SpaceX and NASA, but conflicts of interest really concern a lot of people. If he is running this so-called Doge agency, could he not have the power to say, pull federal funding or pull federal contracts from a competing EV company, for example? Yeah,
this is sort of so far off the fairway, you're never even going to find this ball.
Yeah.
I mean, when you work in the government, and I did this, you are subject to rigid conflict of interest rules. You are required to divest yourself of anything that could prove a conflict in your work for the government. Obviously, he's not going to divest all this stuff. He's not even a government employee, which is a whole nother legal question as to what he can or should be doing. And so this is another classic example of kind of the swamp coming to Washington, and Trump and his people doing whatever they feel like, regardless of what's appropriate, regardless of what even the law is in some cases, perhaps.
It's really working for Elon Musk so far. So, Steve, let's get to some more of your charts on the Federal Reserve, which announced yesterday it has cut interest rates by an additional 1/4 percentage point, its third and final rate cut for 2024. Fed Chair Jerome Powell telling reporters the latest cut, not an easy decision.
I would say today was a closer call. But we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks.
The stock market plunged after yesterday's announcement, with all three major indexes having their worst day in months. Chairman Powell also indicated rate cuts are likely to slow down in the new year. Steve, now back at the table with more charts to help break this down. So expected at 1/4 percentage point, I think, Steve, right? I guess the reason the markets went down, though, is because of that idea that this would be the end of these cuts for a while.
Yeah, and it was unexpected what the Fed said. I think the market was expecting that the Fed's new set of projections, which we can talk about, we're going to provide for 4 cuts next year, and instead the market's projections are now only for two cuts, excuse me, next year. So what this chart shows you is simply the path of interest rates, and you can see that they peaked at about 5.5%, and they've come down over the past year by a full percentage point. I put in the mortgage rate because some people may say, well, why haven't mortgages come down? Mortgages haven't come down because they are actually tied more to the 30-year Treasury, which has in fact been going up somewhat in yield rather than down. But if you take a look at this next chart, you'll see that what the market had been expecting was much lower interest rates sooner, and that all the way at the bottom is September, and what people thought in September was going to happen to interest rates. And then you can see each succeeding quarter passing, 3-month period passing, expectations of rates are staying higher and higher. Why do people think, and why does the Fed in particular think rates may not go down as fast as we thought? It's kind of good news in a way. It's because the economy has actually been stronger than people expected, and then the Fed expected, which you can see a bit on the next chart, where they've changed their projections. And they're now expecting the economy will grow, that's this black line, by 2.5% next year rather than the 2% that they projected previously. So the market and the Fed, for that matter, more importantly, think the economy is a bit stronger. On the negative side of it, on the next chart, you can see what they were thinking about inflation. The Fed just 3 months ago thought inflation would come down to 2%, which is their target next year. Now they think inflation, which is kind of stuck in the 3 range, is only going to come down to 2.5%. So that is part of why Powell said what he said in his opening comments about it. Now, why did the stock market go down so much? Because higher interest rates are the enemy of stock prices. When interest rates go up or don't go down as fast as you expect, people move their money into bonds, into money market funds, and other things that pay an interest rate they view as more attractive than stocks. And so the stock market was really kind of shocked a bit, obviously, by the news yesterday that rates are not going to come down as fast as they thought, and that's why the market rolled over.
So, Steve, I imagine another person not thrilled with this news is going to be President-elect Donald Trump, who prizes the stock market greatly, who, if inflation does stay higher, that's going to make it that much more challenging for his promise to lower prices. And it also calls into question his relationship with the Fed, because we know that he has suggested he wants far more influence over the Fed, even control over the Fed. Jerome Powell, though, has said no.
Yeah, those are all great points, of course, Jonathan. So first, in a way, Trump got a little bit of a break. The stock market took its pain this year rather than next year. And if this is the end of the stock market decline, and obviously we don't know, then he'll be able to, his watch starts on January 20th, of course. Secondly, it's important to note that I think the Fed was pretty clear yesterday that everything they did has nothing to do with Trump's proposals. Trump's proposals would actually make all of this worse because he wants tariffs, which are a tax, create inflation. He wants to he wants to cut taxes a lot more. That would raise the budget deficit. That puts pressure on rates. He wants to deport people. That hurts the labor force, which forces wages up and creates more inflation. So all of this is actually not even taking into account what he might do. So he may have even more pain ahead of him. And yes, he will take on the Fed. He can't fire Jerome Powell. Jerome Powell has already said, I ain't going. He's got about another 15 or 16 months to go. And then Trump can obviously put his guy in. But you can't fight the Fed in a way. What the Fed is doing is necessary. And if you put someone in there, and we've had this before, who doesn't respond to the inflationary pressures by keeping rates higher, who doesn't do the right thing, not what the president necessarily wants, you could have real economic chaos.
Mm-hmm. So, Steve, we've seen Elon Musk as a large example of this, an imperfect example of this, but whenever anything happens, the rich always get richer somehow, and the average American family stumbles along. What does the rocky relationship that exists between President Trump, President-elect Trump, and Chairman Powell, how does that impact the average American family?
The average American family has a mortgage. They may have credit card debt or an automobile loan. And a lot of these policies that Trump is pursuing, as I said, could keep interest rates higher for longer or even push them up altogether. And that's the impact on the American family. And then, of course, you get to the question, what is the impact on the economy? And things like tariffs slow the economy, slow economic growth, cost jobs. Deporting immigrants you may think is good for the average American worker. It's not, because you end up with worker shortages and the economy again slows and you get more inflation. So none of this, in my opinion anyway, is good for the American family. And then on top of that, Trump's tax proposals are highly regressive, meaning that people at the rich would get a much larger percentage increase in their after-tax income
What a surprise.
than people at the bottom. What a surprise. Well, he did it before. The 2017 tax cut, which he wants to extend, would essentially did the same thing. It basically gave more to people at the top, even in percentage terms, let alone in dollars, than to people at the bottom.
And as you mentioned, tariffs would raise prices as well. So that's all in the stew.